everyone. Good afternoon. You're watching the newsroom on ET now with me, Mubina Kapasi. We are looking at a very strong market at hand. At this juncture, we have the equity markets, the Nifty and the Sensex gaining about 1%, with the Nifty firmly above 11,500, being led by the massive rally being witnessed in technology stocks, TCS, Wipro, Infra, Tata Steel as well is gaining a good 4.5%. We'll get you a gist of all those big movers and shakers in trade in just minutes from now. But the question is it going to be an October fest after a spooky September? Jayesh Khilnani brings us all the details.
Historical data shows that the month of October could actually be very good for the bulls itself, because if you have a look at the frontline index performance, that has been quite robust, with the Nifty gaining more than 1% on an average basis during the last 5 years, and the Nifty Bank also surging almost 2% on an average in the last 5 years. But it's the broader markets that have performed really well, because the Nifty Midcap index has surged more than 3.5%, and October traditionally has been the best month of the year for the Nifty Midcap index. Similar is the case for the Nifty Smallcap as well, which has risen as much as 4.5%, and once again the best month of the year has been October. And similar is the case for the other sector indices as well. Let me run you through one by one. The Nifty PSU Bank index has surged more than 8%, while the metals pack have risen more than 4%. And then you have the Nifty Infra along with the energy and the real estate space that have given you more than 3% a piece. And then you have the Nifty Auto along with the Pharma index that has risen more than 2% on an average basis in the last 5 years. Moving on to individual stocks, if you have a look at the gainers, the Adani group has really stood out, because you have Adani Power, Adani Transmission and Adani Enterprises, which have surged about 20 to 30% each. And then you have Coromandel International along with IDBI Bank, which have also surged double digit for the month of October. As far as losers are concerned, not many stocks over here, but you have one large cap name that really stands out, which is IndusInd Bank, negative 5% for the month of October. And then you have the likes of VA Tech Wabag along with Repco Home Finance and Oracle Financial Services, which have also declined in the month of October during the last 5 years.
Thank you, Jayesh, for that. Well, let's tell you then the big movers and shakers today in trade. Gotta be TCS, which is also taking the entire technology pack forward after the company said that on their board meets agenda for the 7th of October will not just be Q2 numbers, but also buyback. Remember, we do have IT analysts saying that TCS any which ways has a policy of, distributing cash to shareholders, be it in buyback or dividend. They do so for percentage. But this definitely does come in at positive news. And with this rally of almost 5%, TCS now has become the second Indian company after Reliance Industries to have a market capitalization of more than 10 lakh crore rupees. Moving on, another Tata company that is in focus is Tata Steel. Almost a 5% rally being witnessed over here. This after, reports suggest that there is a Chinese giant, Jingye, that's eyeing the takeover of Tata's Port Talbot Steel Works. Remember, this company, the UK works, have been under tremendous pressure, especially on account of, the fall in steel prices, exacerbated, of course, by the coronavirus lockdown. And now, of course, with the British government as well refusing some sort of bailout or fund infusion, except for something more temporary in nature, Tata Steel is all set to look for other options for the UK works. And now reports are suggesting that it is Chinese giant Jingye who may consider taking over Port Talbot. More stocks in news then, and take a look at ITI. This is a company we don't talk about very often, but recently it has been buzzing, and how. It signed a contract with the Defense Ministry on the 1st of October. It made this announcement, and it's for the supply and establishment of ASCON Phase 4 for a total contract value of close to 7,800 crore rupees. Massive surge being witnessed in the stock price of ITI. Take a look at Hindalco. Meantime, the news around this one is with respect to its Belgian duffel plant, whose sale it has concluded. The sale of duffel plant has been concluded, and this essentially now opens doors for Aleris's merger. Remember, this was a precondition before the merger with Aleris that was put forward by authorities before they give the nod. And finally, look at Credit Axis Grameen. Relatively modest gains being witnessed over here, but HSBC has maintained a buy with a target at 950 rupees per share. They say that the post-moratorium collections are showing improving trends. The drop in the share of non-paying customers, company is well positioned thanks to its strong parentage, and that also to absorb potential losses. So that's Credit Axis for you. Well, it's a weak D3 debut for Angel Broking, a 10% discount to its issue price. We had caught up with Dinesh Thakkar, the CMD of Angel Broking, who shared his plans for the year ahead and how he plans to use the IPO proceeds. It was also Dinesh Thakkar and Vinay Agarwal. Listen in.
See, it is difficult to comment on market movement. I have seen this market for last 25, 30 years. It has its own sense of like taking a call on day-to-day basis. But if you look at overall broking story, especially digital players, they are acquiring a huge market share and huge consolidation is happening. And if you look at our quarterly acquisition number, we have a CAGR of around 25%, which is unseen like in the history of stock market for any broker. So I feel overall fundamentals will play their role after a few days. So we are very confident about our story. We are very confident about the growth that we have achieved. We are very confident that we are able to delight our users in a way which they have never experienced before. So overall, we see that lots of repeat customers, lots of referrals are coming in. And plus, if we look at the interest rate scenario, which is coming down, which is bringing in more young educated people to the market to experience this asset class. So I see a bright future for all digital players, and I see a big consolidation happening in this industry. But definitely takes time to understand the story, and we would like to wait and see that people absorb our story the way it should be, rather than reacting to stock market prices.
All right, moving on. Some source of optimism on the economy front. Companies across sectors expect capacity utilization to improve by over 50% in the second half of this fiscal. This, according to a survey of CEOs of the top 115 companies in the country. The survey also expects positive growth in exports. We have my colleague Vinny Motiwala joining in with the key highlights and the details. Vinny?
Coming in as the good news of the day, we do have the CII CEO survey, which showed that the worst is behind us. So CII did take a poll of around 115 CEOs, and according to that poll, it is estimating that the capacity utilization is going to be rising above the 50% mark during the second half of this fiscal year, that's H2 FY21. Now this is according to the survey which they took of 115 CEOs. Now also according to the survey, it is showing, and this survey was taken across sectors, across firms. So overall we have a wider view which is coming in over here. So 32% of the CEOs saw that the consumer demand will be surpassing the levels seen in the second half of the previous year, that's H2 FY20, while 27% saw no relative change versus last year, the same period. On the other hand, 31% actually believe that there will be positive revenue growth coming in during this period versus last year, so that's H2 FY20. So overall, yes, the demand revenue, they did say that demand and revenue could be still lower than H2 FY20, but overall the capacity utilizations will be improving, and overall we'll be seeing a good recovery compared to H1 FY21 on a month-on-month basis. So that shows a sign of improvement. Now overall, according to the survey, it is also showing that 40% of the CEOs do believe that there's a positive growth which will be seen on the export side, while also a good positive outlook coming in for FMCG, auto and consumer durable sector, where we are already seeing a decent pickup, and they expect this to be even better, and positive outlook is what is expected from most of the CEOs according to the CII survey.
Okay, well, if it's not just the CEO sentiment that is improving, but we are seeing, or rather the proof in the pudding is also being witnessed by the improvement in the uptick in the frequent macroeconomic indicators. With 6 months done of this financial year, let's go across to Poonam Sani.
Well, the month of September so far has been good in terms of the various high frequency indicators. Auto sales for the month of September are definitely looking good, be it two-wheelers, passenger vehicles. CV still is underperforming, but overall August and September have been relatively good so far. We are seeing that rural economy is certainly a silver lining, good tractor sales, sowing production, sowing pattern is fairly good across the board. Also, fertilizer production is in the positive zone for the 4th straight month. Average EV bills per day in the month of September have risen to 1.8 million. Railway freight has picked up in the month of August. Manufacturing PMI is the highest in the last over 8 years for the month of September. GST collections are also over 95,000 for the first time since the lockdown. Overall, there's certainly good signs in the economy. Rural economy still is certainly a silver lining. Current account surplus was record high in first quarter of FY21. Exports have certainly turned positive for the first time after 6 months. COVID cases are certainly coming down also, or rather growing at a slower pace. CII survey does state that the capacity utilization is likely to rise over 50% in H2. So far I would say September is looking good in terms of various economic trends. Will the trend continue or not? We will have to wait and watch out for. But so far, good data points there.
Thank you, Poonam, for that. Well, we'll do one thing. We'll take a very short break right here on the show. Don't go anywhere. Welcome back. You're watching the newsroom on ET Now. This is a big development in the app world. Google has deferred its plan of levying a 30% fee on all those apps that charge for downloads or sell digital goods and services to March 2022. Indian startups had created a furor over Google updating its Play Store billing last week. This is going to include all subscription apps, including education, dating, fitness. Now, ET Now has been right on top of this story, from being the first ones to tell you about how Google was planning to launch an updated payment policy, to Indian startups joining forces in seeking a level playing field, and also finally to the government taking cognizance of this and being willed to launch its very own app store to counter Google. My colleague Nayantara Rai joins in with Google's newest decision. Nayantara.
You know how they say, united we stand, divided we fall. And that's exactly what we saw in the startup street, where, after Google updated its policy, WhatsApp groups were made, there were conference calls that were held by some of the top entrepreneurs, startups. They escalated it all the way to the government, so much so, like we told you at ET Now, the government started thinking that should the government come out with an app store to challenge Google. Having said all of that, Google says it's listening to everyone. Feedback is very important, and in a move which, it must be pointed out that you may not have seen in other countries, which also shows the importance of India for Google, it has decided to defer its global policy for billing payment systems in India to 31st March 2022. So it's a big development in that sense, with Google saying we're going to have workshops, we want to try and understand what the problem is. It'll give enough time for entrepreneurs to also integrate their own apps and systems with UPI. But the way things stand at the moment, if you buy any digital service or digital good, it could be a music subscription, it could be, extra playtime that you want to use on a gaming app, it could be EdTech, and if it's on an Android device, what the billing system, the updated one said was, you have to go through the billing mechanism put forward by Google, and those apps would then have to share a 30% cut with Google. The problem also is that the third-party e-wallets, whether it's a MobiKwik, whether it's a PhonePe, etc., are not integrated. So that's very interesting to see what will happen. Google for now is saying that it's already added local systems like all UPI apps, all credit cards, and it's open to further engagement. In the blog post put out by Google, they say they have a deep commitment to India, a long-standing one. They will continue working with the startup universe, and reiterated that right now the policy that is being updated for payments will only impact 3% of all the app developers. Once again, reiterate that Google is open to other Play Stores, other apps, that as it is, all Android devices come with minimum 2 Play Stores. So, basically sending out a message as well that it's fine. You can have more Play Stores and App Stores, and they will be welcome on Android devices. Clearly, a very interesting story. It's certainly been one hectic set of 10 days.
Definitely has. Thank you, Nayantara, for bringing us all the latest updates. Alistair Newton, co-founder and director of Alavan Business Advisory, believes that the U.S. President Trump's positive test was a surprise, but given the cavalier attitude of the White House towards the coronavirus precautions, according to him, this was an accident waiting to happen. Listen in.
Yes, this was a surprise, but should we be that surprised given the US administration's very cavalier attitude towards even the most basic precautions against COVID-19? Answer, no. I mean, I think this was in many respects an accident waiting to happen. It has happened. And as you've already said, no doubt, several times on your program, whatever our political beliefs, we all wish Donald Trump a speedy recovery. And indeed Melania as well, and indeed all the other members of the administration who appear to have been caught up in the same wave of COVID-19, which may or may not have begun at a reception at the White House last week when nobody seemed to be wearing masks and there was no social distancing. And put those factors together, and really, I think more rational players in markets will be looking at this and saying, well, okay, it's happened. It looks like the president is going to be released from hospital fairly soon. It looks like his health hasn't suffered too badly. And it looks like the election is still going to go ahead on the 3rd of November. Now, having said that, I want to put this in. We all knew there were likely to be October surprises. This was one that hadn't actually been thought out very closely. There may well be others between now and the 3rd of November. And I think your basic point is absolutely right.
All right. Well, with that, we'll wrap it up on the show. Many thanks for watching.